Good evening, everybody. Good evening. Welcome to our new studio here at Opaline. We're going to spend a little time together now to present our results, our annual results, in the company of Patricia. So first look at our new URD document, which is available on internet and has been since Friday. So during this presentation we'll be making reference to that document, and you can find more detailed information that we're presenting today in that document. As always, a first word about our employees. Thanks for their commitment, their loyalty, and also a look at the number of people who work in Thermador Groupe. So just below 800 people, and you see the growth in staff. The speed of growth has decreased, and that will continue during 2024. That corresponds to the activity of the group. 2 points to point out that you'll find in the extra financial performance statement, which is in the URD. Firstly, the increase in absenteeism is to be noted. You know that it's a general phenomenon in France, but in Thermador Groupe we keep a close eye on that, and we will be putting actions in place to deal with that increase. And we've also observed, although they're fairly modest figures, we've seen an increase in work-related accidents, so lost time, so because of fatigue amongst our employees and problems of concentration. Of course, we've got difficult situation, so socially and so forth, in the last couple of years, and that explains that. In 2024, we intend to repeat our confidential survey on quality of life at work, and that will give you a better understanding of where our employers are up to. And you'll probably remember that we do that every 3 years. So we'll certainly share the results of that survey with you as soon as we can. I'll also, this concerns about our employees, and Patricia will talk about that at the end. There's a free share distribution at the end of our presentation. This is to ensure that we retain our employees and that we get loyalty from them over the long term. So the milestones for 2023, I've already talked about them, but we're going to go through them again today quickly. The MaPrimeRénov' government funding scheme, which has degraded somewhat because the French Housing Improvement Agency, the ANA, is limiting the release of funds. So those who are concerned by these markets have seen a fall in activity. The case of also for Thermador, our biggest subsidiary, who has seen a substantial drop in activity with heat pumps and solar heaters. The swimming pool market also down around 15% in terms of turnover. Of course, that market's been growing fast over the recent years, so it's a sort of correction, and it's fairly normal that should happen. ILO has resisted quite well because their decrease in turnover has been less than 6%, so good compared to the market. Next, new builds in France, very difficult a year again for new builds. A drop of applications for permits, and at the end of the year a very bad new building starts figure, down 22%, which has a direct impact and immediate on two subsidiaries most exposed into those markets, which are PB-Tube and Thermacome. But I would remind you that in terms of consolidated turnover, only 10% of the group's turnover is impacted by that housing market. So as you know, we're primarily working with renovation and maintenance. So the price effect has been substantial again in 2023, with 5.9% passed on to our customers, compared to the previous year, which was 10.3%. And finally, an important point is DPI, which is a company we acquired at the end of 2022, and which was included for the whole of 2023, saw a drop in their turnover, a big drop, due to two key phenomena, which both going in the same way, downwards. A drop in prices, because of drop in prices in polyethylene and PVC, and a drop in volumes. They had big markets in 2022, which were not renewed, and this has resulted in a drop in turnover for DPI. Fortunately, they've been able to maintain their profitability in the years ahead, in the weeks ahead. That means we'll be paying the earn-out, which was agreed during the when we signed the contract, which is just above 5 million euros. So, looking at the major channels, the biggest channel to retail is slightly down for good performance at -2.1%. On a market that was down much more, and the professional channel, which is more stable in 2023 at 0.8%, and that is more than 80% of our business, as you know. So excluding DPI, the turnover was steady at -1.1%, but when we include DPI in the scope, we've got an increase in turnover of 4.9%. So, looking at the 10-year vision for turnover, which is quite flattering, but you have to remember that includes the acquisitions that we've made recently over the last years. And in parallel, on the right-hand side, the increase in consolidated net profit, which Patricia will talk to you about later. So, we've got a closer-up vision with quarter-by-quarter growth, and you see, after a good start in 2023 and a very positive first quarter, the economic climate degraded, and we're expecting continuity of this context, where we'll see a drop in turnover in the first half of 2024, we think. So, a bit more detail in terms of volumes and inflation, and you see these elements over 3 years. So, to the left, 2021, with very high increase in turnover, over 20%. Inflation, which was quite moderate at the time, and it's an increase in volumes of 16.8%. And then moving across the chart to 2023, with growth in turnover, which is fairly to constant scope of -1.8%, so negative growth. Inflation still present, and a drop in volumes of 7.7%. So you see, in 3 years, the situation has changed dramatically. So, Patricia, will you talk to us about profitability? So, in terms of profitability, we see in the curves presented by Guillaume that there's been a drop, but we've maintained net profit beyond the normal levels and above 10%. And we've compared to 2022. It's something that we had anticipated, because the contribution of DPI, with a slightly different business model to our own, means that we knew that it was going to, with its 41 million euros of turnover, it was going to affect our profitability, because there's the different business model. And we see that in the pro channel and in the retail channel, we've got quite good resistance. The commercial margin which has increased 35.5% in 2023, and that means there's a sort of catch-up. In 2022, we had increases in purchasing prices in the purchasing channel. It's been easier for us to pass on those prices to our customers, but in the retail, in DIY stores, annual negotiations mean that it's harder to pass on those price increases. And in 2022, we were only able to pass on a part of those increases. So mechanically, the margin was strongly impacted. And in 2023, we got the full effect of the increase in prices that we were able to pass on to our customers. So it's sort of a catch-up in terms of commercial margin. And this commercial margin allowed us to maintain our profit level at this high level. So events that we need to underline. We'll talk about charges maybe first. So they were increased in compared to turnover. The first element of charges on our profit and loss account is personnel charges. So in 2023, those went up because they represent 10.8% of turnover, and this increase can be explained by the increase in salaries of above 5%, and as Guillaume said to you at the beginning, there's also an increase in in headcount. So we've got 28 people more, than in 2022. Second highest charge element is transport. So we've got a drop there because we've got a drop in volumes, and of course we negotiated new contracts with our transporters. Other element, one of the milestones that we're expecting in 2024 is the increase in energy costs. So we have a fixed price contract for electricity, which we negotiated in 2023, which is about 400% up. So our subsidiaries had to work very hard to reduce consumption, but of course it didn't prevent the increase, and in the result we had an increase of 1 million euros in terms of energy charges. And then the other element concerns latent costs. So if you look at the URD in chapter 6, I don't know the exact page number, but we've got our tax rate, which is above 26.8% compared to 25% in 2022, and this is explained by a decision that was taken, a precautionary decision, which was to write off the future loss carried forward for Axeles. The impact was 600,000 euros. So that means that we had an additional expense of 600,000 euros in that area. Moving on to the next slide to talk to you about our operating result and net result to constant scope. So if you look at our operating profit, we've got the same phenomenon for net profit. It increased more than our consolidated result, and this is because of DPI's result. In 2022, we had them for 2 months in 2022, where they had a very good result in November and December. And in 2023, we have the periods October to December with a loss during that same period, unfortunately. So it's not a reflection of DPI's performance in 2023. You see that they've got a 1.4 million profit, but it's the mechanics of the separation of the results over the 2 months which crossed over the 2 years, and that reflects that. That's reflected in that result. And now onto the next slide. Key indicators that we follow. There's 2 key indicators, which are ROCE, which is return on capital employed, and so the ROS, first of all, we've got a 10-year spread from 2009 to 2023, so 13.7% as a percentage of turnover, and the slight difference between the 13.9% we saw on the previous slide is that it's not based on the same basis, because it's excluding IFRS 15. And then the ROCE, return on capital employed, that's 21.7%. That's the net profit, which is maintained. It's also the result of generation of cash that we've been able to achieve in 2023, but also the impact which reduced the return on capital employed is the evolution of our working capital requirement, which increased slightly, and that's linked to the evolution of our supplier debt. So accounts payable, that fell, of course, so that's connected to the way we purchased during the year. We purchased less in the end of the year. And then moving on to our financial structure, we've got four families that we follow, four indicators. The value of our stock, because we're a distribution company, and the stock is the healthy part of the healthy state of our stock is important. So we've got a value in euros, and that's explained by the increase in purchasing prices between 22 and 2023. And of course, it's normal that we should have this slight increase in value to 191.7. But if we look on the number of days of stock, we're down a little bit. So that's a better management of our stock levels by our subsidiaries, and anticipation for the activity over the first quarter of 2024. In terms of cash, we've rebuilt our cash position because we're at 35 million positive cash. So the next slide will show us how we managed to regenerate cash in 2023. So this is to put in parallel with our debt, our loans, financial debt. And I'll remind you that we're on fixed loans, 5 to 7 year periods in euros, so not exposed to currency changes. So we've got approximately 3.5, a little less, 3.5 million of net negative debt compared to that positive cash point. Concerning equity, remains in good state with our distribution policy for dividends, and maintaining our result, our profit result, allows us to maintain our equity. And then we'll go on to the next slide to explain the generation of cash, because we've so in terms of creation of cash, so there's several elements. Of course, the first, a positive result, a profit, the variation in the working capital requirement, which is page 145 in the URD. You've got a graph to see the variation in our working capital requirement, and there we've consumed cash, and that's mostly connected to customers plus stock and debt, and that means that we've actually consumed cash. So investments, capital expenditure, 8.4 million, linked to real estate expenditure, the construction and renovation of the building we're in now, and other works, and repair to to a roof of one of our buildings, and in IT too, and also improvement in the layout of the equipment that we need in our logistics, for our logistics in the warehouses. Then we've got, this gives us free cash flow, positive free cash flow of 48.1 million, whereas last year we had a negative free cash flow because in 2023 we didn't have any acquisitions and so no new loans, and that explains that the higher free cash flow level. And then the net cash used in financial activities, you've got the 19 million of distribution of dividends, and then you've got the repayment of loans, which is around 8 million, and you've got all the detail of this this information on the page 145 of the URD. I'm going over back to Guillaume, who's going to talk to you about our objectives in terms of sustainable development and our targets therein. So, once again, I would invite you to look at our extra financial performance statement. First thing, good news compared to, in relation to the 19 indicators which appear on page 73 of our URD. We are currently achieving we're on target for our targets, if you like, with an average rate of achievement of those targets of 104.1%, which is a great performance. A word about our carbon footprint. We get closer to a more finite description of this from one year to the next. So 95% of our carbon footprint is linked to the products that we sell. So obviously, to reduce our carbon footprint, the priority for the years ahead will be to work on the products that we sell. So how can we do that? That's the question. So we can include recycled products in the products we sell. We see that a lot of our suppliers are anticipating this, and they're looking at the potential gains from recycled materials, and we think that's a fairly limited in terms of its possibilities, potential. But we will be using more precise tools to identify with our suppliers the rate of recycled materials used in the products. One point which seems important to us in the future is, on the one hand, the energy used by our suppliers in their factories, and the energy policies in the countries where they manufacture. So you can imagine that we need to map all of this, and we need to talk to our suppliers to encourage them to make the necessary efforts to reduce their impact. Will take a long time, of course. Another element is eco-design. That's a long-term project for Thermador Groupe, and this is something, again, that will take some time to have a substantial impact on our carbon footprint. With all this information, we've taken a joint decision amongst the executives from the groups, which was approved by the board, and that was to commit to a 17% reduction in carbon intensity, carbon impact in terms of intensity. The reference set we're using is 2020. The reference point we're using is 2022. And we're looking to reduce by 17% by 2030, because the 2022 figures we see as being very reliable. So we have measured approximately the number of suppliers who will be subject to the new reporting mechanism, CSRD, by 2026, which will be 1 year after us, and we see that standing around about 40% of our suppliers, and that means that in 2 years we're going to be able to get more reliable data from those suppliers and enhance our reporting ourselves. The cost of sustainable development in terms of service providers and salaries in 2024 will be approximately 800,000 euros. And we'll now end on governance. We're looking to propose a free share plan for employees, and we're nominating we'll be appointing a lead director who will be a reference person, and that's an alternative suggested to us further to particularly our Anglo-Saxon investors who are concerned about the combination of the two roles, chairman of the board and managing director. So this will enable her to be a direct contact on subjects concerning governance with the investors. So now a few words about prospects. So for new housing, no good news in the medium term, but of course we're optimistic people, and we see that over a number of months the number of planning applications seems to be stabilizing. So we think maybe the low point will be reached in the first half of 2024, and that maybe there'll be a more favourable market at the end of 2024, the beginning of 2025. Another point is MaPrimeRénov'. This is the government grant for refurbishment. So after the amazing figures announced in 2023 for the increase in the budget for this scheme, the ministers now realised that it doesn't work like that, and when they announced 200,000 housing units were going to be refurbed in 2024, we always said that was going to be exaggerated, and we've seen comments in Les Echos, the financial newspaper. We see that there'll be cuts to those grants, and the positive thing to come out of this is that they've created a thing called these accompagnateurs MaPrimeRénov', which will be advisors, and they will improve the relationship between the applicants and the grants. So there are about 2,000 people at the beginning of January, and the idea is to have 4,000 or 5,000 of those advisors in time to bring those renovation projects to fruition. So we don't see any improvement in the current situation before the end of the first half year. So some data from the market. The first from two trade syndicates. The first is Coedis, and they give monthly trends. And we see that in January is very similar to December 2023, so negative, minus 9%. And we think the first quarter is going to be more or less the same, and there again we're hoping for a better second half to the year. The second professional syndicate is INOA, and they are DIY, the DIY market. For a number of months it's been a negative, we've had a negative trend in terms of DIY stores turnover and so forth. But here we're expecting 2024 is going to be challenging in terms of business levels. So industry, more positive maybe, especially internationally. You can see on these two curves. First is the PMI curve, which is the production manufacturing index. You'll see that for France and for Eurozone, they're both still below 50, which indicates a negative market. However, we are noting in Europe there is a slight uptick. We're not above 50, which would be above 50. That would mean the market is on the up again, but it's certainly turned the corner, it would seem, internationally in particular. Water cycle, next point. I've been talking about this for a year or so now. It's something that we follow very carefully in terms of regulations in order to be able to bring solutions quickly and products that correspond to the needs on the market. I remind you that it's all to do with harvesting water, the reuse of grey water, the repair to water pipes, and these are all helped by Sferco, DPI, Jetly in the years ahead. So that's an opportunity, of course, for Thermador Groupe. Internationally, there's possibilities of growth, especially for our subsidiary Sifco, which exports primarily taps, industrial valves and so forth in Europe and internationally, and it still has ambitions for growth in terms of turnover. And finally, a price impact, which we think will be about 3% in 2024. We'll talk to you about that price factor every quarter, and we'll inform you if it turns out to be less than 3%. But we think the intuition would be that it'll be somewhere maybe a little lower than 3%. So those are the prospects. So I'm going to talk about capital holding. What's interesting is to see that we've gone beyond the 10,000 private shareholder mark, which and getting past that threshold is a source of satisfaction. It's good news, and we welcome those 3,000 new shareholders who joined us in 2023. In terms of the evolution of the capital, we've also noted that we've gone past, as of the 6th of December 2023, Fidelity is a US investor. They've got funds in the US and in the UK, and they've gone beyond 5% in terms of their shareholding. So in terms of investors over 5%, the first is the family office, German family office, Rentrop, Crédit Mutuel and Coty over 6%, and Fidelity 5.3%. So those are the three institutional shareholders who are above 5%, and our foreign shareholders have increased as well. So that's increased from 26 to 28% in 2023. The shareholding of our employees has increased to 6.7% capital held by employees. And so we keep a close eye on that to see whether people have left us. And in fact, no, people have just reduced their volumes. They've sold a little bit. So we also look at trading on the share. You see that in 2023 it's increased to 1.93. You'll see that the alternative platforms, dark pools and other seem to be gaining more popularity compared to Euronext. And you'll see that 1.93 compares reasonably to an exceptional year that was 2020, which was at 2.19. And that's 2.19 million shares traded. Moving on to the dividend and our resolutions for 2023. There are some ordinary decisions and extraordinary decisions. So I'm going to start with the dividends. We propose maintaining the dividend at 2.08 euros, same as 2023, with a rate of distribution of 32.8%. So that's one of the resolutions. There's another resolution which concerns the mandates of directors. I'm going to pass over to Guillaume on that subject to talk to you about that, because this also affects governance, of course, as well. Yes, so thank you very much to our two board members who have been with us for 2 years, who are board members and CEOs, general managers of the subsidiaries. So Guillaume Chaboudy and Philippe Boyce, thank you. It's a tradition in the group to have operational people on the board, so that the board remains attentive to operational questions and not too far away from the field. So thank you to them. So how will they be replaced? So we want to replace them by two people, Franck Bourgois and Mr. Vortel, in a slightly different way, because these two people will be present for 2 years. It will have only one voting right. So the idea is that the scope of voting around the table, there'll be 11 administrators, board members, 5 of them are independent, 4 of them without vested interest, and 2 employee shareholders. So that was again a request of the institutional investors who wanted a better representation of independent board members. And then we're going to move on to the resolution concerning the earnings of Lionel Monroe. So he's Deputy CEO of Thermador Groupe and is also CEO of our subsidiary Sivco, which works internationally, as you know. So to be more clear about this, last year we introduced a specific resolution on his fixed earnings in his role as Deputy CEO and CEO of Sivco. Now we've got a resolution this year on his variable earnings. That's page 42 and 43 of the URD. So that concerns myself, Guillaume, and now Lionel Monroe also. And that shows you in detail how the results of the group affect those variable earnings, and indeed how our achievement of our sustainable development targets achieve those levels. And that's from a number of agencies who have asked us to give greater transparency on earnings. So it's an additional resolution. And then the other resolutions are extraordinary resolutions, and that concerns the free share distribution plan. And every year you will be asked to vote on distribution of free shares. And the first will concern employees. That will be for 0.6% of capital of Thermador Groupe. And there'll be 2 conditions. The first is to be linked to length of service. So it'll be open to people who have been with the company for 3 years. And the second condition will be the achievement of our sustainable development targets amongst those 19 priorities. So it's 50-50 between the two of those elements. So that's for the employees, and 0.6% of capital. And there's be another resolution which will be for the corporate officers, and that will be account for 0.06% of the capital, and the maximum with a cap at 350 shares. So we've deliberately excluded corporate officers from who have benefited from free share plans in the past. So all of those are fairly long resolutions, and therefore the idea will be to give a lot maximum information to you before you vote. And these are all described in the resolutions in that document, in the URD document. Those are the two last major resolutions. And we'll see you at the AGM on April the 2nd, 2024 at 5 p.m. And that'll be at the Musée des Confluences, a museum, very modern museum in Lyon. You can see behind me in the photo. And so we hope you'll come, that many of you will come. We try to hold it in a kind of different environment each time. So those who can't be present will be using Vote Access again, and that will be open from March the 15th. And so from 18th of March you'll be able to connect to be able to vote or confirm your presence at the event. A quick look on the long-term performance of Thermador Groupe share price and dividend. I remind you that the dividend has never dropped since we floated. And this information is available on our website. You see the price every day. And this is considering reinvested dividends in comparison to the performance of the CAC 40, which is the French stock market, and you'll see that we've performed very well. First question now from Jean-Pierre. What levers do you have to protect your margin against the markets? The main lever, which is one we don't have to activate, is just transport. For reasons of confidentiality, we've never given the share of transport costs in our turnover, but it's a major component, you can imagine. It's the biggest element after personnel charges. So I think there are very few other levers that we can work on. Maybe I have a different opinion. Yeah. So the question was only about external costs. So yeah, in terms of external costs, we've only got transport and perhaps temp agencies when we use temps. And there's two of our subsidiaries are affected by seasonal activity. So you can imagine that when those subsidiaries use temps, then there's an increase in costs. So during these periods which are more difficult in terms of turnover, the main concern is to maintain our activity levels. But we ask the management teams of the different subsidiaries to manage their business plans independently. And that's primarily how we manage to maintain levels of profitability which I think are pretty reasonable, and we're not very worried about profitability in 2024. We've had a drop in 23, but it's not dramatic, and quite good performance. So given the stock change in stock levels, we had a lot of surface areas, and so we've called upon outside providers we are able to free up some of the stock areas that we use, which of course can be a saving in terms of rent, and is a way of managing our real estate. CapEx, so Jean-Pierre asks about CapEx 2024, investments in 2024 and 2025 anticipated. What is the share in real estate in those investments? So in 2023, 50% was linked to real estate of our CapEx, and this year will be 45%, and CapEx 2024 will be around 9.7 million of investment, with projects in terms of improving some logistics areas. This concerns Sfaco primarily in 2024. This is a funny one. Thank you for this question. Why is your 2024 guidance much more pessimistic than last year? We're not giving guidance, it's just that you're seeing my words as being less pessimistic. Just saying that we said that Thermador is looking forward to tackling a challenging year. It will be difficult, but and we'd say the same thing today. At the time, there was a drop in the share price level of 15% in the space of a day. I'm not sure if my words would cause such a drop, but if you think that you don't know us very well. What I'm saying today is similar to what I said in October. By tradition, when we communicate about financial things, we're cautious. So as early as October, we clearly stated that we were going towards a difficult year in 2024. And we're pretty sure that will be the case. And we've got a question from English, and Helena, who asks about our M&A activity for 2024. As we announced in November, we'll continue our due diligence for a company called Comte Energy, and as we mentioned in the letter to shareholders, we're hoping to complete this operation in the first half of 2024. Other acquisitions, we don't have any specific cases at the moment. We're focusing our efforts on finalizing with Comte Energy. Question from Guillaume about Red Sea tensions in terms of our purchasing. I'd remind you that it's about 1/3 of our 29%. Excuse me, Patricia. 29% of our supplies come from Asia, so China, Taiwan, and other distant countries. So the impact is on 1/3 of our purchasing, so fairly limited. In spite of the price impact on containers, there's no significant impact today for Thermador Groupe in terms of margins. Prices can go up and down, of course, and this information that we've received quite recently is taken on board by our teams in their pricing, so that the impact is limited on our margin. It's true that at the beginning of January we were a bit more worried about that situation, and thinking that mechanically there will be delays and increase in prices, and we see that things are getting back to normal to some extent. Until what we're seeing now is that there's not as bad as we thought it was going to be, and the situation seems quite normal now. Slight impact from the Chinese New Year, but I think we're close to normal in terms of deadlines and delivery times. So in terms of questions, I've got no more questions that are coming up on the chat. So maybe we can wait a moment, see if there's any more questions. No, I only had Rena's question about mergers and acquisitions. So there's 40 of you connected this afternoon. I'd restate the organisation of these webinars. We from 4 p.m. we have a webinar which is more dedicated to institutional investors, and then an hour later from 6 p.m. that's 2 hours later, we have a webinar for our private shareholders. More or less the same message, which allows us to have different questions and different answers. So that's why twice a year we differentiate these two webinars. So got another question coming in. Jean-Pierre is asking about DPI and the prospects, the outlook for them. So after this year of a drop in turnover, the team is mobilized to correct that. But of course, in a very competitive market, so I would say that what we want to be able to do from 2024 is to stabilize their business activity, keep a close eye on profitability, which is important. Of course, there's also restructuring projects for the management team, so that we can ensure optimal reporting into us, into the group. And in the URD, you'll see in the first year of Thermador Groupe, we didn't include DPI into our extra financial performance statement, but we'll have to do that in 2024. That's the news from this team from Monaco. Anything else you want to add about DPI? There'll be monthly financial reporting. 2023 was difficult for DPI, and so between the operational elements and the reporting elements, management of DPI focused on operational issues, of course, which is a normal thing, and less so on the reporting. But this year we're going to push them a bit harder on improving their reporting. It'll help them, it'll give them better visibility on their margins, and it will maybe allow them to have a better management in real time. We've got a question from Paul about energy costs. I'll let Patricia answer. It's not one of the really crucial things for Thermador, because we're not a big consumer of electricity, but in terms of evolution of margins in 2024, we don't give indications on this subject, but if we look at our gross margin over a long period, as you'll see in the URD, the decentralization of the group and the giving responsibility to the individual subsidiary teams gives them more impact on this gross margin. I'm not worried about it. They certainly won't go up in 2024, but there won't be any dramatic drops in terms of gross margin. In terms of energy costs, Patricia, so 2024 we renegotiated the contract. We had to be very cautious because it increased 4 times in 2023. In 2024 we're looking at a drop of 40% of 2023, but that's something. Second thing is that we talked about a drop in our consumption, so we're going to continue to benefit from the progress made in energy efficiency, energy savings. We've got photovoltaic panels in Sodico and Audrea, Ailo XLR. So there's two big buildings where we've got photovoltaic panels installed. It's about 40% of their consumption, which they're generating themselves. And on the other side, you saw a picture of the tracker behind, and that's a tracker is for sectoriel. It will allow them to cover 40% of their consumption, and that will have a full effect on 2024, but it will also allow us to reduce consumption. That's a tracker you can see in the photo behind me. And the other element, we talked about investment, real estate investments. One of them is photovoltaic panels on our buildings. That will continue, and that will help us to reduce our consumption. So we hope between the reduction of 40% plus the reduction in consumption, we're hoping to have a bigger impact on this energy item. As Guillaume said, we don't consume a great deal of energy, but this does have an impact. Question from Romain that I missed: how to improve the operational profitability of Audrea, which is at 4.9%. I can see that Romain has consulted our URD. That's good. If you have a look at sectorial, it's a good idea too. So how we don't ask the question in that well. If you look at sectoriel, the margins are very variable, and we like this diversity, of course, in terms of figures. In the past, very often investors said, so is it really worth staying in that business, DIY or retail business, where the margin is lower than in the pro channel? And the answer has always been the same: yes, it is worth it, because there's a number of synergies that we achieve amongst the manufacturers and the products and the know-how, and so we want to continue to keep a foot in this door with retail and DIY in objective terms. No ambitions to increase Audrea's margins that you're suggesting. Audrea is a similar company to Mecafer Domac, who have years with good profitability, other years with lower profitability, but we're not going to achieve 14-15% margins with those subsidiaries. I'd remind you, in these retail markets, they're very big customers and who have very high market shares. So the two leaders are ADO, and there's also Kingfisher, who own Castorama, the former who owns Leroy Merlin. So they've got very strong negotiating positions. It's good to see that return to a positive result for Audrea, and they've rebuilt their result in 2023 by contributing to our ERP, adopting the ERP of the group, their legal adjustments to their status, to their rules of procedure, and they had lots of challenges to face, and they've achieved 4.9%. is pretty good. That's it's a good performance, even though it is maybe lower than the group as a whole. Question from Victor: could you talk about certification for MaPrimeRénov' that's being planned? No longer any need to use an accompagnateur, the famous advisors. Simplification of the RGE levels. I'm very cautious about these sorts of announcements, because it will be contradictory what the authorities want to do. The authorities have made these changes, it's because they are looking to prevent fraud, and in particular single gesture and small, when there's only one purchasing action from the public. So the discussions are in progress with the public authorities, but if our changes are going to be made by the public authorities, I think they'll be minor or very closely controlled to avoid any fraud in that with the mechanism. It's 5 p.m. There's no more questions waiting. I'll check. No, none for me either.
Il y avait la question de, j'ai pas répondu aux investissements CAPEX 2025.
Ah oui.
CAPEX investments 2025, there was a question.
Pour l'instant, on est sur un montant, on est sur des montants de l'ordre de ce qu'on a dépensé à peu près sur 2023, de l'ordre de 7 millions 6, 7 millions 7, pour 2025.
7.6 million for 2025 for the moment. So investments are to be defined in terms of adapting our logistics activities, and of course that figure may change and maybe spread over time in a different way, but that's the outlook at the moment. Okay, it's 5 p.m. Just like to thank you for your presence, your questions, and to say that we'll see you very soon in different fora, or even one-to-one. If you have any more questions, of course, we'll be very happy to set up a meeting. And we've got our AGM in 1 month's time, and all the challenges we have to face. So, good day to all of you, and have a good evening.